Hey guys, good morning, and I hope you're having a beautiful start to this beautiful day. It's quite early right here, been quite busy, so I decided to pick this time to quickly go through the assets and see what we have for this week. I've not done any pre-scan about the market, so bear with me as I go through it. I might go through it very fast at my own pace, to just see what's up. So this video might not be long. Now, if you've never been here before, welcome. We look into three strategies. We look into COT report, seasonality, and probability. And we use these three fundamentals to back our technicals, and then use that to select which assets we're going to trade and when we're meant to trade these assets. And ideally, using a robot to go into the entry for these assets, right? For those that have it and for those that don't have it. I mean, everyone has access to the automatic stop loss and take profit from it. So let's get right to it for those that have been here before. If you haven't been here before, welcome once again. Check the previous videos to do a little bit of background research into the strategy. So let's go to COT report. Let's look at gold, see what we have for gold. So this week, the commercials don't have anything. Now, for guys that haven't been here before, quite frankly, analysis with gold is already done. But let me show you how we do the analysis. So we have three categories: non-commercials, commercials, and non-reportable, right? And this is a lagging indicator. If you look right here, you see the date on the 15th, and today's date is 21st. So it's about a week behind. And what this report shows us is the positions of these three categories right here. These guys are the producers, right? So when you're talking about producers, I'm talking about people that have mining license, people that mine gold. So they do their feasibility studies, whatever it is they do in the background, and they use that to uh, make judgments on what they're meant to do in the market. So, for example, if someone strikes a vein of gold, for example, they know that they're going to be making some good money in the future, and then they have to put that information into the government, and then price of gold tend to go up depending on how much pot they find of gold somewhere, stuff like that in the background. Now, these guys are very clued up on what they're doing. These guys, on the other hand, are non-commercials. They're retail investors. You got some banks in there, and even in the first category, you got some banks in there as well, because some of them do own, some of these mines. So you have in the non-commercials, you have, banks, you have retail investors, someone trying to make a quick buck from, all of these investments. Right? We don't pay attention to these guys. They're not sure, but we pay attention to these guys. And what we look at is if they're going long or if they're going short. That's it. Very simple. We don't care about anything else. We want to see them going one side than the other. 100% one side and the other. So one has to be green, one has to be red, right? And when I say green, red, I don't just mean like you have 71 positions and that's it. You want to have a decent amount, like 1,000 right here is good, or like let's say 9,000 right here is good. So for gold, for example, this week we're not going to touch this asset at all, right? Because both of them are pointing towards long and short. So the market is confused. We don't touch that. Now, for guys that trade FX, there's a lot of them right here. You can look into them. But quite frankly, I'm looking into indices. They're more stable. Indices, stocks, metal, oil, more stable. And you can easily have an EA run on those ones in the background without you having to worry about anything. But with FX, you have to be checking it every now and again because it's dealing highly with people's emotions. These guys also deal with people's emotions, but there's so many companies, packed into them at once. So it's very difficult to make all of them go down at once or move at once. So for S&P 500, for example, we have 50,000 positions going short side, but we still have 7,000 here. Now, if we had this 29,000 here and then minus 6,000 here, we'll have said, okay, we're going to go long in this. But as you can see, they're both going in they're going in the opposite direction. So we don't want that. These guys are going in, similar directions because they're taking our positions from here and adding it to here. So, but we don't follow these guys, so we're gonna let that go. And that's analysis for S&P 500 done. If I wasn't even speaking to you guys, this is what I'm gonna do. I've seen my position for this one. Go here quickly down seasonality. Open that new tab. No, wrong one. Yeah, there we go. And come to NASDAQ. analysis. I'm just trying to illustrate how quick I can literally do an analysis. So let's just go back to this. And basically, analysis is practically done. All I need to do now is look at probability and the date and done. So with this one, what we're looking at now is these guys are going long. They've added 6,000 positions to the long side, right? 6,000 positions to the long side. And we're going to come into NASDAQ. This is NASDAQ mini, by the way, not the main thing. Just I think there's a derivative underneath that. So we're going to look at the time. So today's the 21st, right? We're going to come to the 21st of October. All right. Wow, this morning's gone as well, man. And we look at what it's saying. So as of the 21st, it's telling us we can go short. What we look at here is you can see that the blue is the 48 years, red is 15 years, the yellowish, orangish is 5 years, right? Now, or let's say gold is 5 years. Now, those are the average price movement in those period of time. So up until 2019, and I know that this hasn't been updated in about how many years now? About 5 years? Okay, that's actually due for update. Ideally, it's good for update about every 5 years. Personal, I found, And just a disclaimer in this, right? This is for educational purposes only. I'm not literally telling you guys what to do with your money or what you put your money into. That this is a disclaimer for you made in the video. So if you're watching this video, I think this disclaimer in the start, but there's a disclaimer. There's going to be a disclaimer in the description. Right. So every 5 years, ideally, is good to change them because if you change them every year, the changes are very minute. You won't be able to tell the difference. So it's good to give it a period of time to see how different it becomes. So you add the new 5 years to the 48. So the 48 becomes like 53 years and all that stuff. So now, when you look at this asset, we want to look at where price correlates during this time period. Like let's say here, for example, at this point on the 28th of June, price tend to move up together. All three of them are moving in the same direction, right? And when they're around here, they'll all move in the same direction, going down again, right? You want when they're moving in the same direction, but you don't want when one is going down, one is going up. That's not good. Yeah, you want it to all be in the same direction. So for that reason, you don't need to touch this. It's quite simple. I've looked at this on NASDAQ. It's telling us to go long. And when I check the 21st, right, this is telling us to go down. Long means to go up, right, buy. Short means to go down, sell. So if you look at this, yeah, one, the 5 years is going consolidation. Two, they're not all going in the same direction. And three, this is trying to go down. If you look at the majority, it's going down while this is saying going up. So for that reason, this is bust. NASDAQ is a no-go. And next one, you look at Dow Jones. Yeah, not the same direction. And quite frankly, that's it. You can look at other assets like silver, palladium and platinum and all of that, or you can look into crude oil and all of that. But for this session, that's all I have for you. So I'm showing you it doesn't have to be very stressful. It doesn't have to be something that you have to stay 24/7, on. You can have a normal life while you still invest in the market. Just don't spend too much time on it. When you get your opportunity, maximize it. When there's no opportunity, go have fun, build your other businesses, or do something with your family, But if you're trading good lot size, you're doing good money management, and for us, for example, that we have, the automated trading system, I don't even have to look at this. All I have to do is once a week, touch this, set it, and I'm done for the next week. So once a week, I'm done. So ideally, we're going to look for a way to re-automate all of that you don't even have to do anything. You don't have to even come here and check anything and just click a button and leave it set for life. But I'm thinking about that. It's a lot of investments. So yeah, that's how simple it could be. So there's so many assets in the entire world, and these ones are just small asset classes. And what I would say is if you can diversify and look into a lot more assets, then you see a lot more assets that are stable. Some of them might not look interesting, like, the US dollar versus euro and all of that. But something like corn, for example, could be a good target. If you look at the positions in corn, you go 721,000 in corn. If we go to the Aussie, for example, might not be up to that. Those are smart money. Look at, you only have 56,000 positions here. But if they tell you to take between corn and Aussie dollar, you're probably going to take, Aussie dollar, because that's where the noise is at. Yeah. Like if you look at soybeans, for example, let's see what positions you got. These guys are smart money. There's a heavy amount of them. And because the people require food, right? Not everybody requires, Australian dollar. Australian dollar is confined to its own borders, right? But corn is everywhere around the world. So if you really look at it, right, money is quite pointless. Corn is worth more than the Australian dollars because the Australian dollars is restricted within Australia. In order for you to move Australian dollars to another country and have the ability to use it, you have to convert it. But I can take my corn from Australia to all the way to Britain and still eat it the same day. I don't have to talk to a middleman for that. So these are more stable. What I'm trying to tell you, they're more stable. There's no middleman in them, right? These guys right here have a lot of middlemen in them. The only one that doesn't seem to have as much middleman is Bitcoin, right? Bitcoin doesn't have that much middleman. You get, but it's not that popular within the main economy, the major economy yet, right? So that actually looks good. If you look at that, it looks long. Let's quickly do the analysis on Bitcoin. Let's see. I think it should be on the stock analysis. Yeah, there we go. So we do have Brent here. We have some stocks, Amazon. Oh, that's probability. But that's also good. Let's look. What's the date? 21st. So if you guys have never seen probability before, probability is like a tool. It tells you the future, basically, what's happening. So, crap. This hasn't been updated for this year. This was last updated 2022. Well, yeah, I'll probably have to get that updated. Um, let's check the seasonality for Bitcoin. I have to get that Bitcoin probability updated, but at the meantime, we can still check the Bitcoin seasonality to see if it is in season. All right, so what we know for Bitcoin is going long, right? Now they're buying positions. They bought 505 positions in there. Next thing we'll look at is 21st. Oh, we're right here. Ideally, Bitcoin should be going up. Um, just checking some right here. So it's crypto. Let's see what Bitcoin's saying. Now I have to look at the probability. I mean, we haven't seen the probability for this. Um, we haven't seen the probability for this because it's lagging. So we have to update that one. But Bitcoin should be going up. Yeah, Bitcoin is already going up. Nice. The probability, the seasonality said we should go up. I mean, when was this? 23rd. I don't know what the COT report was at the 23rd of 09, but if we check 23rd of 09, that was around here. That was ideally when it's meant to take off, but we can't tell because we don't know what the COT report for that time was. So if you didn't align, then we can't take that. But it's aligned now. When it started moving was the 10th of October. All right. So it started moving here around this period. So we were meant to have a dip and then till 23rd. And from 23rd, take that move. I'll wait for that dip first. The dip hasn't shown yet. You get, and if you look at it, it's a critical level right here. So it's after the dip. Whenever it dips, if it dips by today, tomorrow, whenever it is dip, it's dipping, then you take the shot. But because the probability isn't available yet, we can't say exactly where the shot's gonna be. So it is what it is, guys. Those are the opportunities for this week. I mean, Bitcoin looks good. So if you have the membership, go into the site, check the membership. And then if you don't have the membership, check the link in the description and you'll be able to get the membership. Alternatively, you can go to business.demicpie.co.uk/pricing right here. And you'll be able to get the tools to use for, your investments. Hi, guys. Nice having you joining us today, and I'll catch you in the next one. Stay dangerous and God bless you all.